a tiny cycle that affects the next day seriously. This is the subject that I'm going to be covering in this video. Today is the 4th of June 2025. We are on gold chart on 5 minutes time frame. So let's not to waste time and dive in right now. Last night in a New York session, market rallied upside as in a spike. Then entered into a possible channel, and then market was right here creating this falling wedge. I took a buy setup on this candle because I believe there has to be a second leg for this rally upside, and this is what exactly market did. And if I just measured from the bottom of this leg to its top, and when I dragged this line from the top of the falling wedge to its top of this leg, I realized this is where I have to put my profit target, and you can see when it hit the profit target, it just fell down because lots of traders had taken the same trade and they agreed on this leg, this measure move, and market just sold out downside, touched the bottom of this channel, and then again rallied upside to do what we always talk about. Most channels finish right after touching the trend channel line after the third touch. And if you see the previous video, this was the first touch, this was the second one, and look what happened to the third touch. So wide, so big, and this was a really big channel that was created by this tiny spike. So let's just see what happens today, which is the 4th of June 2025. So market, after creating this small channel and creating to the upside, market hit lots of profit target and it formed its second leg. Let me just change this to the second to show you what exactly I mean. So this one was the second leg, and then rallied the downside, and it created a falling wedge. So if this is a falling wedge, and also it is also the bottom of this channel, and as long as we are in this area, market is also in a trading range because channels are a weaker rally rather than in comparison with the spike. So if this is the spike, which it is in this case, this is just the channel. So after channels finish, market enters into the trading range, but this channel is a little bit different from what from the channels that we normally see, and I'm gonna tell you exactly why. So market rallies upside, touches the top of the trading range, and comes back down in a specific form. It creates a spike, another channel to the downside, touches the bottom of this channel, and then it again rallies upside. Let me just get back a little bit. This was the first candle of the day, okay? And this channel, this tiny channel, broke from the top, but it couldn't rally upside, which sometimes it does, only 20% of time. So these are 3 touches that this breakout from this trend channel line formed, and I can call also this one a wedge. Every 3 moves that can't be successful normally does the opposite movement. So it breaks from the top, comes back down in 2 legs, comes back up, and when it comes back down into the channel, it touches the bottom of the trend line. It goes back up again, but lots of traders see this as a good opportunity to just get out. That's where lots of opportunity taker sellers dive in and create this move back. So when I see such move down, this isn't a spike downside, and when it comes back down, lots of buyers also get out. And when sellers see this spike, this rally downside, we normally expect from the market to create also a second leg. If I call this the first leg, this is its second leg. And also, if this is a wedge, wedges have three touches. If this is the first touch, this is the second touch, and this is the third touch. And just look what happens, guys. Okay. The three touches, and the first leg and then the second leg, is somehow exactly where this trend line forms as a support level. That's when a lot of traders come into the market and buy the market aggressively. Market breaks from the top of the wedge, comes back down, makes this shadow to touch the top of the wedge, and then creates a high one setup. And a high one setup is nothing but just a pullback, the first pullback in the spike phase. So this is the high one. You could have easily taken this trade and put, but the thing here is that if you had taken this trade, you could have put your stop loss below this low, and you see what happens. 1 to 2 risk to reward ratio you could have expected. All right, and when specifically you see the very next candle after the market breaks above the wedge, this is a confirmation bar. This one. Why? Because most of the breakouts usually fail, market comes back down, and just it doesn't happen what normally traders, which I would say someone who is in the beginning years of trading, they expect to go. But this one here, in this case, this candle is a confirmation. So you could even take this trade. I have put a mark upside on below this candle to show that this is a very good trade you could have taken, and then market just creates other bullish candles, each one closing near its high and creating a very tiny shadows above. And a spike is the most strongest movement in price action, and you have to expect for possibilities of market rallying upside, but the next phase would be the channel. Take a look at this part here. If this doji is the first pullback, which is a bearish also candle, then this one, then this trend line is also a tiny channel in the direction of the spike. So the spike, channel, then market breaks down. And if you see, this channel has ended in 3 touches, which is the case in most channels. First touch, which top of this spike is the first touch of the channel, then the middle of the channel, market touches again. In this case, it overshoots the trend channel line, then comes back down to touch the bottom of the trend line, then goes back up for 3 touches and comes back down, creates a small trading range, breaks from below, and now this is where market enters into the third phase. Bottom of the channel is always where market looks to come back down and touch. So this one, after breaking the channel, we expect the trading range phase. So if this is the trading range, I call it, just write a TR. So if this is a trading range, the strategy is to buy low and sell high. You could have also taken this trade right here because, you know, below the beginning of the channel after the market phase is where a lot of traders look into, and when market comes back down, they look for some patterns like this small double bottom. These two are double bottoms, and these two with this candle is also a double bottom. You could even have bought these candles right here, this candle. You could have bought this candle, but your stop loss has to be somewhere below this low or in the beginning of the market. But look, this is a very tiny distance between the beginning, between this trade and the stop loss. So market goes into your direction, but unfortunately, it comes back down below the trading range. And when this happens, we know that you have to measure from the bottom of the trading range to its top, and then measure it to the direction of the breakouts. Okay, and this is this area is where lots of traders who have taken this short, this one and this candle. If you had taken this short setup, you could just put your stop loss above the beginning of the first candle of the spike, and then look, you could have measured the stop from the top to the bottom and drag it, and this is where your profit target goes. You could have taken this trade, and after this rallies, cycles begin in trading ranges also. Let me show you something here. If this is in a spike, series of candle closing near its low, after its market creates a channel, which you can clearly see by this specific lines, market between this low to this low, it comes here, and then it overshoots, it can't make it, comes back down into the trend, into the channel. And let me just show you from this top, the first touch, the second touch, and then the third touch. So this is 1, and then 2, and then the third touch. After the third touch, market overshoots the line a little bit, comes back down into the trend, into the channel, comes back again. And after the channel breaks above, we know that the next phase begins, but this time the beginning of the channel is where you should expect market to come back and create another trading range, and also the bottom of the trading range, another range here. You see, between these two areas, after this channel, between these two areas, which is the beginning of the channel and the beginning of the end of the channel, is where market consolidates. And take a look at this trading range, because this one is really interesting. This trading range is really interesting to me because it has a clear shape like a wedge. First touch, second touch, third touch, fourth touch, and fifth touch. After the fifth touch is normally triangles finish, and they usually break from the opposite side. And also specifically when they have fade breakouts like this shadow here and this shadow here, when it can't make this breakout successful, market usually does the opposite thing. If even there isn't support level in the other opposite direction, it usually breaks it. And if you see this candle right here, this is the confirmation of what I said. This candle has easily broken after the fifth touch of the trading range, and then continues rallies downside. You could have measured from the bottom of the trading range to this line and drag the line down. This is where market could just come back as a profit target. And if you see distance is nearly about this distance, is equal to this distance. All right. So when market break down here, but I somehow was hesitated about this movement, whether it has to be successful or not. And there is a reason here which goes back to the first topic I said. Today's video is about how a tiny cycle affects the next day. Now let me zoom out the chart a little bit to show you what is happening exactly. All right, guys, do you remember this spike, the beginning of the story that I said in the beginning of the video? This spike creates a channel. Okay, clearly you see the channel, and channels are the weaker movements of the spike. Okay, and also channels are parts of trading ranges. You see, this channel just widens itself until it creates a bigger trading range that is also expanding itself to the next day. That is what is happening today. That is what happened on the 4th June 2025. So when it broke downside, I was suspicious about this movement to be successful for continuation for lower prices, because there is also another reason here. Let me just mark the bottom of this channel which the cycle created the previous day and see what happens. This is what happens. The exact place that this channel began gets touched in the next day. And there is also a point here. If a channel has been created today, it could even get touched the very next day. and this is the time that sometimes takes, and sometimes it takes 2 days, and for the strongest moves in sometimes takes 3 days. That depends, nobody knows, okay? But we know that one day it's going to be touched very shortly, however. So I knew that this candle can't be, this breakout can't be successful. However, this one is a successful breakout because of this candle. It comes back down but can't break below it, and it creates a double bottom with this bottom here and also this bottom here. So a double top between this and this, between this place and this place. Now, what is the strategy in trading ranges? In trading ranges, we know that we have to buy the lows, buy the lows, buy the lows, buy the lows, and sell the highs, sell the highs, sell the highs, and sell the highs, sell the highs, and buy lows. Okay, that's the strategy. So when it came back down, I was a little doubtful whether this is going to continue or not. And let me zoom in a little bit to show you what market exactly did. When market comes back to this level, to the bottom of the channel of the previous day, it creates a triangle, a vertical triangle. And these triangles are just trading ranges, smaller trading ranges like this one, like this triangle. If this is a trading range, this one is also a trading range in a lower time frame, like 1 minute time frame. And what does trading ranges tell us? Trading ranges are dodgy candles in higher time frames. So when market is in a specific level and it creates a small trading ranges, it means market is, you have to consider this as an indecision in the market. Okay, so this place here is an indecision place. Okay, nobody knows what's happened, but we know that it's above the support level. Okay, so, and also we are in a bigger trading range that has been affected by the previous day's cycle. Market consolidates between these two levels, market comes back down, and when it touches the bottom, what's the time? The time is to buy. But should you just buy the market blindly? Of course not. You should wait for some signals. You see, this is the bottom of this trading range. Let me just delete some of these lines in order to help you be confused about what we're talking about. Market comes back down to touch the bottom of the trading range, and then it goes back up. It means the direction of the breakout is upside. That's a good sign. But is it a good place to buy the market? Here, some traders might do. Sorry, let me just get help from this. Some traders might buy this candle or this candle, but look what happens. There is a shadow about these candles that makes me a little concerned. So I have to wait for more confirmations. And what is my strategies in trading ranges is that I always wait for the pullbacks, and pullbacks is the best place to buy in trading ranges. Above the support level, buy the pullbacks, and below the resistance level, again, sell the pullbacks. So that is my strategy. And if this is the strategy, you should buy this pullback. And look what happens. When market was live, a big candle came back down here, and it was very scary. But did I close at the bottom of the trading range? No, it didn't. So it means lots of traders have bought positions to go long. It means buying low in trading ranges is also their strategy. So if it's their strategy, it has to be also your strategy. So you could, after closing this candle, is a good sign that lots of traders have gone long. You could buy this close, and just look what happens. Instantly after closing this candle and opening the next candle, such beautiful bullish candle begins, means lots of traders have gone long. Even some of them took their profit at the middle of this trading range, middle of this symmetrical triangle. Right, if I just take this, that would be really nice. Yes, lots of traders have taken their profits That's what made the market to come back down. But also, lots of other traders who hadn't gone long here now think it's a good opportunity to buy the market again, because we are still in the bottom and we can go for the expectations that market can even go and touch the top of the trading range. That's where you could have, as market came down, you could buy all these shadows. All these shadows are places that you could have to put your buy limits, and you see 1, 2, 3, and 1, 2.5 risk to reward ratio you could have expected. So these are all entry prices. Okay, this pullback you could have bought it. You could have even bought this pullback. Okay, then wait patiently to see what happens. You see how beautiful market rallies upside and touches the top of the trading range. This is how market was affected by this small movement in New York session last night, and after the channel created a trading range which was in action, in movement until today. It means this cycle was alive, and I don't know whether it's still alive or not, but the only thing I know is that it seriously affected today's trades, and lots of traders might have gone confused about this type of actions that we had today, but those who have read the price section correctly were still the traders who made money today. So it's better to only look into market as they really are. All right, now the trading range here breaks from the top and comes back down and pulls back to the top of the trading range, and this place has to work as a support level, but nobody knows whether it is going to hold it or not. But let's just forget this trading range for a little bit and talk about this cycle that I see right now. Why? Because right now I can see market is in a trading range again. So I think this is a really beautiful cycle that has just begun, and it began in New York session. During the New York session, it was in effect. So do you remember this rally upside? If you had bought these pullbacks, you could have taken your profit target here, and market rallies to this place. If only I call this as a spike, another spike which is also the beginning of a new cycle. If this candle is a spike, then where is the channel? Market rallies upside, comes back down. This rally is weaker than what we normally see. So if what happens? Sometimes a very weak small can end into sharp channels, and this one is a market cycle that usually happens in only 2% of time. It means if we have 100 normal spike channel and trading ranges, only twice this type of cycle happens, and it happened again right today. Right? So a very weak spike then creates a very sharp channel, and just take a look at this channel. Its form is absolutely different from what we normally witness in the market. This is the first one, first touch. Then this is the second touch, right? And this is the third touch of the channel line, and this is our trend line. And let me just change the color of this line to show you this amazing market cycle that formed, and it's something like something happening in a lifetime. So a spike enters into the channel, 3 touches, it breaks from the downside, and what is the next phase? The next phase is the trading range. Take a look at this trading range. This trading range after this channel might just continue like this between this area, and this specific area, which is the last higher low of the market. Okay, so it can form just like a normal trading range, but I think it can also there can also be another possibility here that right now is happening. This trading range form could also be something like this two lines in a vertical triangle. Let me zoom out. You see this this triangle after this spike, and after this spike this triangle, and right now after this spike this channel, another trading range like we had today for twice is happening, I think. So if that's the case and breaks from the upside from this top, maybe if market comes back down, you could just buy the pullbacks, put your stop loss below this low, and take your profits right at this level at the top of the trading range. Okay guys, it's nearly end of the New York session, and I think New York session has ended. It's nearly end of the day and the new day is going to start. Thanks for watching the video till the end. My name is Xauusd, and just wait for the other videos. In my videos, price action is so easy. I'm going to make it for you so easy, so you don't need indicators. Don't forget to subscribe and follow, and let's grow together. Have a good day and goodbye.